this is how I lost negative 1.5 RR day trading EUR USD. Let's get straight into it. Okay, so we lost. Boss was wrong. Okay, so how is our boss wrong? Because the fourth week of the month. Holy. You go back in a higher time frame, fourth week of the month is always a retracement, right? Like last month, fourth week retracement. Fourth week retracement, right? It depends, right? If it's a bullish candle, the fourth week was always going to be a retracement because monthly time frame is closing a fair price as well, right? This month, first week expanded, second week expansion, third week retracement, fourth week retracement, right? The fourth is always going to be retracement. I thought the third week last week, even before, I thought the third week like did a retracement, so we're good to go for a long again. It did another retracement, right? So you can see back in the time, which one was the next day? This right over here, retracement. It didn't retrace, but it closed like, in a very low range. I hate the fourth fucking week. Every time I'm trying to turn the fourth week, I always get worser. You know what I'm saying? I actually that's some bullshit theory. I ain't gonna lie. This week I had an 8RR, so that's some bullshit theory. But usually usually my boss always gets messed up, but the reason I had an 8RR because my boss was bearish. Why? Because fourth week you need to close in a fair price. So it needs to go back down. Right? So the way we could trade the fourth week from now on is always look for a short or long if the monthly candle is a bullshit bearish candle, right? But market needs to close in a fair price. So now let's go over in the higher time frame. Higher time frame, boss was wrong, right? We went from a weekly IRL to ARL, weekly to the upside. Daily time frame, we went from a daily SMT IRL. The SMT is false at this moment, right? You can see the SMT, we have it on DXY. I do not know why. I don't know. Like, this is why sometimes I don't like to use SMTs. Whoa. Okay, what is this bearish candle? This bearish candle is this candle. Okay, so this candle is that candle. Boom. Okay, there's a gap right here as well, which got inverse, which already got tapped multiple times here. Which this one didn't get tapped. So the SMT is relatively still holding, but tomorrow I'm going to be looking for a short, right? Why we're looking for a short? There's going to be a reason, right? It's all fine. It's all cool. We lost around, we're down right now, currently negative 3RR because, bro, spreads are crazy, bro. Market hunting my shit. So we have a weekly IRL to ERL for our buys, weekly to the upside, right? See how I'm not even sad, I'm not even mad or anything. I'm just happy, so I'm satisfied because I followed my rules. Just that our boss was wrong, so now we could definitely learn something from it, right? The fourth week is always going to be retracement, right? This what we can learn from it, right? And multiple other things in the entry execution as well, because entry execution, I did something wrong as well. So let's get that today too. So we had a daily CA to the upside, right? As well as a daily, SMT IRL to ERL, right? That's what I was looking for along here. But keep in mind, we did a classic expansion profile, 2 to the downside, to Monday high of the week. So looking for a Wednesday, looking for a Tuesday, Wednesday continuation. You see how our IRL has not been met yet, which is fantastic. That means tomorrow we could go for there and get that goal met, right? Because it's literally telling us that he wants to go down, not up, right? So now let's go to a lower time frame. In the 4-hour time frame, we had a range high. This is our range high, this is our range low. Range low got purged. We go to range high. As well had a 4-hour CRT. As well, we had a 4-hour key low. This is for our auto block, right? As I said, my boss was wrong in his day. It's supposed to be a bearish spot. It's supposed to take a short from this candle right over here. But that short, he never offered me my type of entry. It did offer me an entry, but that purging, as you guys know, purge matters. The timing of the purge matters, right? So I didn't take that short. I did see, I was like, yo, this looks much cleaner than a long. Because to me, even me, the market profiles was telling me like, yo, this does not make sense for a long opportunity here. It does not make sense, right? So, yeah, we're looking for a new continuation because London just made the low of the end of the half day. So that happened. Now it no longer made it, but during that Pacific time where we're trading it did, right? So we had an hourly IRL to ARL as well as LCC to the upside, right? We're looking for a new continuation, and that's our boss. We had a bearish auto flow, and we had a kilo to the downside. That's all we have for bearishness. But before we go to our bearish side, let's go to our bull side, right? Let's go for the execution here. We got to the lower time frame, 5 minutes. There's a legit low right over here, right? So this is the candle soup of the low. We had a range. This is a lower time frame total soup. boom, press it out. We're looking for a 1 minute execution. This is why I love the 1 minute execution, right? You can see how this is the 5 minute, even the 5 minute. If I were to wait, right, not to the 1 minute, I would enter at the 5 minute. Guess I would face a loss as well. But guess what? The thing is so far away, right? The RR difference is very huge, right? That's what I could say. And if you go to the lower time frame right over here, we are looking for this. This is the last high that took out this low. Boom. We're looking for a closure above. Got a closure above that unicorn model, overlapping for value gap with a breakout structure as well. So that literally tells me, okay, we're good in a 1 minute model. We had the 1 minute model entry. You can see market came back all down. We're right back up, right? This right here would be considered as a retracement in the lower time frame. Market profiling would have been a retracement, right? You can see expansion, retracement, expansion, right? So it makes very sense. I do not know why. To me, even the market profile told me like, yo, there's necessarily no key levels here detecting this. So it looked like a expansion, retracement, expansion, retracement, expansion, right? Expansion, reversal, retracement, expansion, retracement, expansion, right? Retracement, and we caught in a retracement. Because as you guys know, every time you take a wrong trade, market will always give you a retracement profile for our expansion. So market would, let's just say, take a long, market retrace, expand, right? So at the low time, it's going to expand, low, higher time, going to retrace, right? It retrace and go back, right back to expansion. I said the same thing. You're short when you. I know you guys seen this happen before. You guys go up, you short it, right? You're gonna short. Market goes down a little bit, goes right back up. That's gonna be considered as a retracement expansion, right? So yeah, that's what happened. That's what happened to us. I'm very happy though. The loss happened very quick. It did not take a whole day for us to get stop loss. So if you're wrong, you want to get stopped out quick, right? Which we got stopped out quick, which is why I'm happy. I'm satisfied from the trade. Built good habits. I followed my rules, but we could definitely have improvement on this trade. Let's get straight into it, right? So in the lower time frame, you can see our entry, the difference on our entry between our entry and our execution is far away from each other, right? You can see why. It's hectic, right? That's all I can say. The reason I think I say it's hectic is primarily because, man, spreads are crazy in our market in the prop firm, right? It's the spreads are crazy. So I entered here right when it tapped it, and he told me that I entered all over here. I think after possibly tapping the account first, then buying it because I didn't tap it, right? I didn't tap it. I wasn't into that, window. So I was just primarily just here, just tapping it right without being in that window already. So I was outside the window because I was trading. I was looking at trading view first, then I tapped instantly without being in that window. So that's why the market gave me a delayed. So that's gonna give me an entry there, stop loss here. So next time, what we could do is tap it first, tap the window so that it touches there. Eventually, go buy it faster, right, or sell it faster. But everything was fine. Execution happened, just the wrong, bias here. Boom. Stop loss was right below the breakup block. You can see market trades all to the breakup block. From now on, once we had the loss, you can see market retrace all over here. But this is not always gonna happen. Market could go all the way down here, right? If you go to the lower time frame, it could go all down here, then go right back up, right? You can see you can go all down here. You can see over here, go right back down here, go right back up, right? That's why the lesson of the trade is from now on, I will no longer be trading the unicorn mode in the 1 minute time frame. I will be trading only the CISD because why? The CISD always offers me a total soup loss, stop loss, right? As you guys know, entry is OTE, stop loss is total soup, right? So total soup is our stop loss, OTE is our entry, right? So this is what we always want, right? So that's what happened. And the lesson is I will no longer be trading the unicorn model. I will be trading the CISD only. But I will always need to have a unicorn model there every single time. Why? What market tends to do here, this is just through me learning, right? Market will just go down, soup out the low, right? Eventually, just say there's a low time for total soup, right? Give it CISD, boom. But this is the last time to soup out the low, right? So market never goes above it, goes right back down. The CISD gets soaked out. The same thing again, boom, gets stopped out right again, one more time, boom. Right, eventually the market is the last high, goes up. And eventually, this is their actual CISD. Market comes back down, overlapping fair value gap, boom, taps to go right back up, right? So you can see we lose one time here, two time here. As you guys know, we want to take the highs probably setup. So the highs probably setup will be during the unicorn mode, right? Right over here. And if you go back in time, I can show you guys multiple examples of this. Right? If I go back in time, let me see if I can find a good example here. It didn't happen on Monday. It happened last week. I'm pretty sure. Not only did it happen on last week, it happened on. What did it happen on? Not sure which day it happened. This right over here. I could smell it. I could smell it. Can't be that happened this day. Right. This is the last. In this case, I mean, it never did that, but you can see the concept, right? You can see this. The marble one is usually always the dominant, right? You got overlapping fair value gap. So that's how the super the low. This is the low that swooped it out. This is the right CISD here, right? So if you were, so yes, yes, there is an example for this, right? You see this candle right over here. That candle got. Let me get a drawing here. You see that candle? Closure above got stopped out, right? See how you see this is why we want a unicorn model, right? Because this one, when you close above, you never close above the unicorn model here, right? So you just close above the CISD. So now you close above the unicorn model, right? It gave us upline for a Ferrari gap with a breakout structure or a strong displacement. Market tapped it, boom, right where it tapped it just exploded from high from here, right? The upside, and you can see never really fucked around and find out. It just went. Right? This is our last Thursday trade. But if we were to execute a trade last Thursday, we would have been in a trade for a 12 RR, right? We were going for a 12 RR, but market stop loss at a 1.5 market did an OTE here, right? You can see it was a long ass time. I'm not gonna wait that long. Right. So if you go right over here, market OTE, holy frame. You see OTE push right back up high from here, right? Boom. Hitting a strong liquidity for a day, right? For that trade. So that's the example I give you guys. This is why we're looking for from now on, a CISD entry instead of the unicorn model. He's probably wondering like, whoa, you just took 2 losses in back-to-back. You know what I'm saying? From the 1 minute time frame. Even a 5 minute, you offer him a 5 minute entry as well. So even the 5 minute will enter the trade, right? If I was just to wait for a 5 minute entry, and I'll still face a loss, right? Same thing as our last trade. Loss. Right? But it's just our boss was wrong, right? So that's what we can learn from it. Yesterday, I don't think we had any shorting bias here, but so yesterday trade, which is yesterday right over here, boom. Yesterday we did have an SMT divergence. We did have an SMT divergence that called it a pair, right? But SMT divergence never offered as an entry there, right? It did a random ass candle, and that random ass candle gave us a marble one, and that there was literally no form of marble one. Market just pushed down without giving us any marble one, right? Because the high that was dominant was a bearish candle instead of a bullish candle, right? So that's why he did not have any marble one because a lower time frame. I'll show you guys right over here. Right, this is the 9 AM candle. 9 AM candle had a total soup above it, right? So SMT. Guess what? The 9 AM candle never really had any, marble one here, right? So it didn't close bullish. So I was like, okay, so that's not an unusual form of marble one, so I'm not gonna take it, right? But I did definitely see that happen, and that's how we took a long day and took a loss because our boss was wrong. So now let's go over why did we lose? Why did we face a loss? I'm satisfied. I'm grateful from this loss. I learned something, right? I learned something that during the 4th week of the month, we're always going to be looking for a retracement. I'm always going to be looking for a retracement for the 4th week. Last month, literally, we go back in time, full ass retracement. The month before that, full ass retracement, right? So we would always want to have a retracement because it's open, high, low, close, right? Market needs to open, right? Market needs to open, make the low, and eventually make the high and close. When he closes, he needs to close in a fair price. He can't just close over here. It doesn't make sense, right? It's a big ass candle, won't make sense. The market has to come back down, open, low, high, and close. You see the high made over here, and market made a close coming back down, right? Even with a bearish candle, right? Open, high, see right over there. Market made a low and close, right? Right, so market open, made a high, made a low, and closed. It did not close down here. It closed right over here. So market is close at a fair price, especially in the weekly time frame. It needs to retrace, right? So tomorrow's gonna be a different bias, and we do have a weekly CA to the downside right over here. We could potentially go to the 50% mark. This month does need to make the low and high, right? So we could definitely go to the 50% mark of this monthly weekly CRT and go down there. And on the daily time frame, well, you're wondering like, yo, this SMT right over here. How come are you looking for a long, right? Is it the SMT affect your bias? Yes, it does, but it's a 4th week. Time is more important than price. So for our bearish narrative from now on, So this week ends, we have a classic, especially profile 1 to the downside, profile 2 to the downside, Monday high of the week, looking for a Tuesday continuation, Wednesday continuation, Thursday continuation, Friday retracement possibly. If the goal does not get met, we're looking for another expansion, right? But in this case, we have a daily ERL to IRL. Why do I care about this for VIA gap right over here? I don't think so. If you go to the go back to let me go back to G here. Right, this is the fair value gap, right? I do not care because you see this candle right over here, right? This bearish candle. If you mark it down there, right? That candle, fair value gap already got tapped, and it already got tapped so many times. So there's no resistance showing that he wants to go and hold it there, right? Does not want to go show us any bearish signs here, right? You see, markets want to go up high from here. So my goal is still here. That the average is not holding it there, right? So yeah, and it's a full through the month. Time is more than the price, and especially it's like a weekly time frame, right? So weekly time frame has power over the daily in the 4-hour, in the 15-minute, right? So we're looking for a daily ERL to IRL classification profile to the downside. Fully the month looking for a retracement, as well as we're looking for a close below lower prices, right? That's what we have. And if you go to lower time frame, this the market never gives an execution here. It did, but the total soup timing was wrong, right? If you go down here, time of the total soup was wrong, right? And this here, because here there was not a legit high here as well. Not a legit high. Market soup that out. The setup is not our setup. I'm not gonna take that setup, right? So yeah, you can see the timing of the purge supposed to be happening at 6 a.m. and market purged out at 5 a.m. So I did not take that trade simply because quality over quantity, right? So yeah, tomorrow probably gonna have a different bias. Am I any sad? No, I'm happy. I'm grateful. I'm satisfied from this trade. It's just that the SMT diverges that now hold, and it doesn't even make sense here because this SMT got this Vervega got inverse, right? So there's literally no sign of getting respected here, and this is the candle. This is the candle right over here. This is our SMT, right? This Vervega is our SMT candle, and that candle literally got disrespected. So it's either showing any signs of you want to get disrespected. Respected, I mean. As we have a weekly C to the downside as well as a full big retracement. So what I'm gonna do now, the lesson, the recap, lesson is for the lower time frame entry, the 1 minute time frame entry, I'm going to be entering out of the 1 minute time frame if I have the opportunity, but I will always enter out the CISD instead of the unicorn model. But I will always need to have the unicorn model there. Then if the market retraces my entry, I will enter the 1 minute. But if it does not, then no. And other lesson is that I will always need for the 4th week of the month. I mean, this the next lesson is that 4th week of the month, I will always need to have we'll always need to be more careful because we need to have retracement. Our Monday trade that we took for a short which is literally a short. So 4 week needs to retrace. You're short. That's why you move so quick, right? As well as our 4th week, the Monday trade, our draw key was down here, which did not get met still, right? It takes a couple of days, right? But we still would have been in that trade, right, to the downside. But it was like, in that time, enough for me to pass the challenge. So, I just did that, right? So right now, the lesson is 4th week retracement, 1 minute CID entry only, but I always need to have the unicorn model. But the 4th week, I need to be careful. I also need to look for a retracement instead of expansion because last week, even last month, right? You can see 3rd week did a retracement, even the 4th week did another retracement because 4th week needs the retracement, right? So yeah, this is my weekly market. I mean, not weekly market recap. This is my trade recap of how I lost negative 1.5 OR, which is basically, I'm pretty sure $500. No, I'm pretty sure $780, right? That's how I lost $780 day trading Euro USD. Thank you for watching. Peace out. Very viable lesson. Now I'm gonna go ahead and add this in my arsenal. Peace out. Peace.